Hello. Good evening, traders. We are back again with another episode of Trading Digest. It's been a while. Right? Okay. So if you're here with me and you can hear me loud and clear, let me know in the chats. Yes, we are in a new month's time. Okay, thank you. Loud and clear. Well done. All right, so we will crack on from here. Just as we do it, I'd like to put in some illustration of how we trade the markets. So we have this illustration first of all, then we'll look at the actual charts, then we continue from there. So I believe we had a wonderful month of October, as we are in November now. So I believe by now we should have done our monthly review to see how we did in the month of October. And perhaps you have not done it yet. You need to do it to at least have some data at hand to work with in terms of how you did in the month of October and what you need to change, what you need to refine and fine-tune it for better trading this month of November. Okay. All right. So now we have illustration of a market structure. So from this point on, we can see we've been making higher high and then higher low. So this is higher high as it looks to be in an uptrend, and this is higher low. So the same thing applies here. Higher high. Let's take this off. Okay, so we have higher high here, higher low, higher high, higher low. So as we can see, this is clearly an uptrend up until this point where we began to move sideways, creating equal lows and then equal highs. So this is sideways movement where you can see we have an equal high, equal lows. So from this point on, we had the market breaking below these equal lows and then putting in a lower low here, and then we had a higher low. So a typical criteria of a downtrend has begun. So higher low, another higher low point here, and then this is a lower low. We have market structure breaking or close. Have market structure breaking or closing. We have candles closing above this high that was put in here. Then we have a break of structure. Another break of structure right here. So anytime we take the high, a higher high data point, we cause a break of structure. Another break of structure right here. So from this point on, what we are interested in is we look out for this break of structure, or if it's happening for the first time, we normally call it change of character. So after the first time, okay, let me just put this. So let's say we have this here, and then we had this first time break. So this will be change of character. As I always say, it doesn't really matter. Once there is a break, there's a break. The most important thing is we want to originate it. We want to locate the origin of this move that caused the break. Whether a break, change of character here, or break of structure, all we are interested is looking for the origin of the move, of this whole impulse move that caused the change of character. So if this move began from here, we want to identify our imbalance demand zone. Since we are in an uptrend, we want to identify our imbalance demand zone. So we do that by identifying or naming the last indecision candle before the impulse move. So if we have a last indecision candle here, we just take the high of that candle and the low of it, and that area becomes our demand zone. So with this demand zone as well, we want to identify some area of imbalance attached to it. We want to identify some area of imbalance attached to this demand zone. So let me use the tool that I normally use to mark the demand and supply zone. So I use this rectangular tool to pick the low and the high of the last indecision candle before the up move. So over here, this will be our demand zone. So we also want to see some form of imbalance attached to this demand zone to make it a valid area to consider taking a trade from there. Yeah, so we want to see an imbalance. So an imbalance is basically a three candle formation where the first candle and the third candle, there is a gap in between. So let me put it this way. Let me try to do a quick. So we have that as our first candle. That as our second candle, and then our third candle. So as I said, it's a three candle formation that we call it an imbalance. So with this we want to see that this, if this is the first candle, its wick traded up to until this point, and the second one also had a wick, the third one also had a bit of wick, the third one, this is the third candle, also had a wick here. So this is an example of a downward trend. So we have the first candle here, second candle, and the third candle. So the area that we want to identify is this gap between the first candle, which is this one, and the third candle. So we can see that the wicks left a gap in between this move, which we refer to as the imbalance or the fair value gap, as some may call it. So this is the imbalance area that I'm referring to, a three candle formation. So we can see that the wicks did not trade into each other. We had this gap in between here. So this is the imbalance that we want to see attached to this zone. We want to see attached to this zone. Okay, so let's take this out. Okay, I believe this is clear. Okay, so we continue from here. That was just a quick illustration of what an imbalance is. So this imbalance is what we want to see around this demand zone anytime we identify a break of structure or change of character. So we have to originate it. So this is the origin of the move which caused this change of character. Another one we have here, this will be the origin of the move that caused the change of that caused the break of structure. Sorry, the break of structure. So we said we want to see imbalance attached to this area to make it a valid area to consider taking a trade from there. So this is how we want to see it. So this is an uptrend. So in an uptrend, we are only interested in taking trades from these zones that we mark. We are only interested in taking trades from these zones. So the same way, we have another break of structure here. This area will be the origin. So we will mark and wait for price to revisit there, and then we take the trade from there. So again, we have an area where I marked equal highs and then equal lows. So in a situation like this, before price will decide to go down south or change the state of delivery to the downward move, if there is equal highs, it's most likely for price to first of all clear the liquidity resting above here by putting in a buy scenario where it will look like it's going to buy, continue the uptrend, and then all of a sudden it turns round. So this example is an example that you can see that it purposely came to clear the liquidity resting here. It purposely came to clear the liquidity resting above here. So once we clear the liquidity, we want to see a down push. So the down push began where we took out the low, the most recent low here, causing another break of structure. So this being the first one, we'll call it change of character. This is the first break after this move up, closing below these equal lows. So this is a change of character. So more or less, we've changed the direction that we were initially moving, the up direction that we were initially trading. We change it to a downtrend. That's why we call it a change of character. So once we have this put in, all we do is we look for the origin. So we look for the last indecision candle that the move started from, the last indecision candle from which the move started. So probably if we have the last indecision candle from here, then this area will be our zone. That will be our supply zone. Our supply zone. And with this supply zone, as we said in the uptrend, we want to see an area of imbalance attached to this supply zone, making it a much valid area for us to consider taking a trade from there. So this is an area that we want to see price coming back to revisit, and then we take a sell from there. Okay, so the same way we had another break of structure here. So this is a break of structure. A break of structure. So this break of structure, the origin will mark from here. This is the origin. That will be our supply zone. So if it's going downward, it's supply. If it's going up, it's demand area, we call it. So we want to see it as a valid area to take a trade from. So we want to see the imbalance area attached to it. Yeah, so this happens to be the way we look at the market structure. We read the market structure this way. So anytime we go on the chart, we want to identify risk by identifying and marking our zones. So all we want to do is to mark the zone and wait for price to come back to these zones, and then we sell from there. We mark these zones, wait for price to come back to these zones, then we buy from here to the upside. It's as simple as that. Okay, so that's a quick illustration of how I look at the market structure and how I trade. All right, so we go straight into the actual charts. We go straight into the actual charts, and then I hope you guys can still hear me loud and clear. Okay, let me clean this off from here. Okay. All right, so let's look at what we have coming this week. Let's look at what we possibly could be looking at coming this week. So we have on the chart here BTC. So okay, so we have BTC right here. All this work, great. Okay, so we have BTC right here. So what we normally would do is we want to have a top-down analysis. So we'll either start from the daily charts, or we could have a quick overview on the weekly to just see the range that we could be looking at in terms of looking at last week range, last week high, and then low, and then see possibly if we are within that range where we could be moving towards and where we could be going off from. So let me quickly clean the charts. Better still. Okay, so this is the daily charts. Let's quickly hop onto weekly. So the weekly, we just want to see where price is at. We're not just going to trade on there, we just want to see. So we have here what we did the whole of last week, and then if we're considering the overall trend on the weekly, we can see that we are in an uptrend. Putting in, this is a lower, let's see, this is a higher low, as we're illustrating on the chart earlier on. This is a higher low, then we put in this higher high, we put in this higher low. So this is a typical example of an uptrend, as we're looking at on the illustration that we did earlier on. So currently we kind of moving sideways, just as we're looking at on the charts earlier on the illustration. So we can see how price is beginning to move sideways. We're not making any new highs. What we're making is equal highs and then equal lows. So that is what we have currently. That is what we have currently on the week, last week as well. Okay. So as I said, on the weekly, we are not looking to be trading on the weekly. We just want to see what price is, or pick the range, just as I've done here. Then we can go back on the daily time frame. So on the daily time frame, we can see, just as we identified on the weekly charts, that we are beginning to move sideways, or is equal lows. Then we are definitely in a sideways movement or consolidation area. After this up move from here, we can see that currently we are holding at this level, creating equal highs and equal lows. So we want to take advantage of this knowledge, knowing that from this point on, we came from this high to this point. So if we are here, we are most likely going to target the next high point. So we've been to this low here. We've been to this low point here. From this impulse move, from this move which started from this high here, we touched it the first time, pushed up, came back for the second time, pushed up again, came back for the third time. So currently we've touched the area for 3 times. So let's look at what could be happening. Let me clean this. Okay, so, and we know that this is the range, the weekly range that we put in on our chart earlier on. And then we also have identified that we are currently creating equal highs and equal lows. So we're most likely to let me put this here. Equal highs, equal lows. Yeah. So we can see that we have body close of these candles within this range as well. So from this area, we at least anticipate to hit this high points, which price is beginning to be playing within. So if we are moving sideways, and that is how we could be targeting to trade this this pair. So yeah, that's how we could be targeting to trade this pair. Again, with this this is the daily time frame. So the daily time frame, currently we can see that in the past 3 days we've been putting in this green candle showing signs of pushing up after we revisited this area. Also, we can see that on the daily we had a break of structure here. We had a break of structure here. So normally this when dangerous at times. So let's be careful with that as well. Let's be careful with that. Okay, so we can see that we had a break of structure from this point on. From this point on, we had this break of structure here. So as we said, once we have a break of structure, because on here we can see that we had a body close above this high that was put in. A body close. The candle had a body close above here. So that's a break of structure. So with this break of structure, the origin is from this area. So that will be our demand zone. That will be our demand zone. So let's see if we have some form of imbalance attached to that. Yeah, so we have the first candle being this one, the second candle being this expansive one, big candle here, and the third one being this. So the wick of the third candle is right here, and the wick of the first candle is also here. So we pick the high of the first candle to the low of the third candle. So that will give us our imbalance zone. So which makes this a valid area to be looking to take a trade from to the upside. So this is our imbalance demand zone. So this on the daily. So we want to further refine this zone. So what we could do is pop onto the 4-hour time frame. 4-hour time frame. So already we had price tapping into this zone and then giving us signs of pushing up. So let's see. let's see what we have here. So on the 4-hour time frame, we can further refine this zone. So we want to consider the it said the last indecision candle before the up move. So now we can refine this area to this particular candle here. We can refine this area to this particular candle right here. So this also gives us a better risk to reward in terms of where we want to take the trade from, because once you refine the area, you get a better risk reward ratio. Okay, so on the 4-hour time frame, this is what we can have here. So we can see that we had a poke down here, purposely coming to clear the liquidity resting here before the up move. And then we had this bullish engulfing candle right from here, from the zone. We can see that we put in this equal lows here. Remember, I was telling you about we clearing liquidity from the upside in the illustration I gave earlier on. So this time to move, so before it makes any expansive or major move, it wants to clear some of this liquidity. The market always move from one area of liquidity and gets drawn to the next area of liquidity. That's all that market does. Okay, so from this on, we can see that on the 4-hour we have refined it to this zone, and then we've had a bullish engulfing from the zone, a very beautiful one for an entry to the upside. Okay, so apart from this here, we can also see we had another bullish engulfing candle right here, clearing all this data that was put in from, I think, from yesterday, from Friday to yesterday. We had this one move, one 4-hour candle, clearing all these candles here to the left, showing or indicating how price wants to go to the upside. So currently we have price coming back again. If we look at this candle here, we can see that it fell below this candle here, and I believe the main purpose was to clear some liquidity. As we can see, there was some equal lows put in here. Once there's equal lows, there are liquidity resting here. So this candle purposely came to do just that, to clear the liquidity and then looking to push to the upside. Yes, we have put in another bearish engulfing on the 4-hour candle, but I believe we had recently had a break of structure here. We had a break of structure here. A break of structure here. So as we said, once we spot the area, the break of structure, we have to look for the origin of that move. So on the 4-hour time frame, the origin of that move will be this particular candle here. This will be the zone. So that will be a demand area, and then attached to this, we can see that we have some imbalance attached to this area as well. So imbalance right there. Okay, so we have an imbalance demand zone where price is currently at and has cleared some liquidity here. Hopefully this holds price. So what I want to see on this particular price action here is, so long as we have price action contained within this bullish engulfing candle here, we are still good for the upside. But the moment we have price body closing below this, it becomes invalid. Then we're looking to be looking for forward to be selling instead of buying, because we have this most recent bullish engulfing here, and with this price action we don't want to see a bearish candle closing below this bullish engulfing candle. Once that happens, we're no longer interested in buying to the upside. So currently we had a poke below it, but we didn't body close it, close below this bullish engulfing candle. So this is still valid to look for opportunities for the buys. So up here we can see, if we're looking for opportunities for the buy, we can see that we have some zone here, imbalance, that needs to be filled. Above here we also have imbalance here that needs to be filled. So if this price action alone, as we identified earlier on, we are in a sideways movement. So if we are in a sideways movement, we are bound to have these happening within the range. So this is the high of the range and the low of the range. So by name, this breakup structure has been calling us by name for us to respond to it, not to react. Respond to it. So by, as I teach my guys, by responding, once we have our name called, we respond to it by identifying the zone. So the first zone, I would say, is from here. Let's put this in here. So that would be a supply zone. So attached to this supply zone, we can clearly see we have an imbalance. As I said, it's a 3 candle formation: first candle, second candle, third candle. So I'm going to pick the low of the first candle, which is here, and the high of the third candle, which is right there. So that would be the imbalance area. So ideally, if we want to sell again in this particular price action, we want to be looking at this zone to take a sell from there, as we also identify that we are currently more or less, this happens to be the third test of the low of the range. So with that said, we can be aiming for the high of the range, which is where this line is. So we also have all these imbalances along the way to be filled. Yeah, so currently we have this zone here. So once we get into this zone, we could possibly push up to this high. So as I said, we've had a tap of the low of the zone of the range, and we've been given bullish engulfing candle, and currently we had another bullish engulfing candle that has cleared all this data on the left hand side to it. So this is also a zone, an imbalance demand zone. So we could possibly be looking for a buy from here to this zone, and then ultimately to this high before we break out of this range. So this is what I'm kind of looking at. So from here to here, we might have some reaction. So this area could be used as an inducement area where we could have price could put in all the necessary indication that is going down, but it might fail, and then we'll push up to this high. So this area could be used as an inducement area since we have these pending areas here. So this is another zone that we can identify on the charts. So this last indecision can provide area of imbalance. wide area of imbalance right here. So if I should mark it, that is the imbalance zone. Yeah. Okay, so these are the zones that we could be targeting. So as I always say, over here we build, if this happens, we're more likely to have this. So if further down, so this further down, so this we are building, if this kind of if this happens, we are building this two scenarios, multiple scenarios. If this happens, this is how we look to trade. If this happens, this is how we look to follow the market. So as I said, currently we have price within the last bullish engulfing candle that was put in. So I want to see price being contained within this last bullish candle. But the moment we have a body close below it, I'm not interested in buying from this zone. But so long as we don't have a body close below this last bullish engulfing candle, I'm more than happy to take a trade from here to this zone here. And then from here, we'll see how price reacts from, because as I said, this area could be used as an inducement area, aiming to target pushing up to this zone, because we have these imbalance areas that we need to clear as well. There's also liquidity resting here, and then we could be aiming to the top of the range as we identified earlier on. So this is how I see BTC. This is on the 4-hour time frame. So we can further refine it by going to 1 hour. So on the 1 hour time frame, we do the same thing. So as I said, we do this to kind of give us a better risk reward ratio in terms of how much we will be risking on this particular trade if we want to take a trade from here. So with this scenario, yeah, so we can see how we have narrowed the zone to a very tiny area, because what we are interested in is we want to see price coming to this zone, and if we get a better indication of price turning to the downside, that is where we want to take a sell from there. Other than that, as I said, this area could be used as an inducement area. So as we look out for a better indication here to the upside from here to here, as I said, we want to see price contained within this candle here, the 4-hour candle that caused the engulfing. So once we have price not closing below that 4-hour candle, then we are good to look for buys to this zone. So in any way, if we are interested in taking a sell from here, then it must be done with confirmation entry. From this zone to the downside. Other than that, we could be looking out for this. We are in the zone now. We are in the imbalance demand zone on the BTC. So this 1 hour time frame. So as I said, we could be looking for, and so we should be watching out for this as price either make its way from here to here, or we could have a break from here back to this area, and then we look to the upside. So these are the multiple scenarios that we could identify here. So what I said is, if we hold within that 4-hour bullish engulfing candle, not closing below it, I'm good for a buy from here. Other than that, we could travel from here to here and then maybe turn around to the upside. So those are the scenarios we could be looking out for. So it's the same thing, refining the zone to get a better risk reward. We can further go to the 15 minutes and then look for a better risk reward. So if you get a better risk reward, like if you enter a trade from here, you want to put your stop loss above the zone. You want to put your stop loss above the zone. Or if you want to be a little bit generous, you can just go above this high here, and then you aim for 2 to 1. So you risk 1 for 2. You risk 1 for 2. Yeah. Okay, so that is it on BTC. I believe that gives us a better picture of what we should expect. Okay, so this area, as I also said, this is a 4-hour marking I did. So if we should look for a buy here, maybe you enter a buy somewhere here, your stop loss is below the zone, which is wider. So to get a better risk reward, just like we've done here, we refine the zone to give us a better risk reward for our entries. Okay, so I think this is good for BTC. Let's look at gold. Let's look at gold. Let's see what we are most likely to experience this coming week. Okay. All right, so gold. I think I've put in some markings already. All right, so going by the key levels that I teach, the odd 50 key levels, we can currently see that we've touched first time on from this move, this impulsive move, we touched on the 3950 key level, pushed above it, came again, then pushed above. So currently we are within 3950 key level and then 4150 key level. This is the zone we are in now. So let's look at it from a bigger picture, weekly time frame, and see where we are at. In terms of the weekly. Let's clear this chart first of all. Okay, so on the weekly, you can clearly see that we have been very bullish, and then currently looking at the 2 weeks price action, we have had a body close below the last 3 weeks bullish candle, which made this all-time high. This is the last 3 weeks candle which made this all-time high. That's a 4380, or better still, if we're going by the key zones, we hit the 4350 key level. Let me plot it for 4350 key level. Yeah, 4350 key level, we hit it. We had price rejected from there, and then looking at the last 2 weeks price action, we can see that we have a body close below the last 3 weeks candle, which better gives us an indication of selling mood. So we've had this sells to this point, as we indicated, 350, 950 zone. Yeah, so this currently we have price getting to the 450 key level, 4350 key level, and then we had price being rejected from there. So now let's go to, so the same thing we did earlier on. This is the high of the previous week if we want to get a narrow range to trade with. So this is the low of last week, the low of last week. So that kind of gives us some kind of range to deal with, the dealing range. Okay, so we go to the daily time frame. The daily time frame. So on the daily time frame, we can see something beautiful also happening right here. We can see that price had just put in a bullish engulfing right from here after we touched on this key level. We've had the price giving us a bullish engulfing. So for us to continue the uptrend, we don't want to see price coming to body close below this candle here. For us to see the uptrend continuing, or a turnaround of this move, we want to see price not having a body close. So whatever happens this week, if we are contained within this bullish engulfing candle, not having body close below here, then we are in for a much more upward moves. But so long as we have a body close, price push down and then have a body close below this candle, then we're looking to be going to the south more, going to the south or downtrend. Right, so let me clear this, that off. Okay, so let's continue. Wow. I've taken an hour for breakdown of these two pairs. All right. Okay, so as I said, this is a daily candle that has caused bullish engulfing candle. So this more or less candle, it's, as I always say, it's a gift play. So this reversal into this zone, we look for entries to the upside because we have the indication here that we currently want to go up. That is why we have caused this bullish engulfing candle right here. So with this upward move that we think we could be pushing, mind you, we also recently had this bullish candle closing below on the weekly time frame. If I should do this, let's do this way so that to be clearer for everyone to see. So I've taken the wicks off so we can clearly see that we had this bullish engulfing candle here. That's the last 3 weeks, and then we currently have body close. The last week price action had a body close below this. So if there is going to be any buying, there's a high chance we are going to buy to fill any imbalances that was left as price pushed down to this low. So any sell or any buys from here, as we have seen on the daily that we have a bullish engulfing there, so that could be an indication for us to fill any imbalances that was left here as price pushed down, because we have the bigger time frames. What it tells us on gives us much more better, it carries more weight compared to the lower time frame. So this is the weekly time frame that we have this indication on. So we have a bearish engulfing on the weekly time frame, and also we last week when the market opened, we put in this area here, this volume imbalance area here, where we could have price retracing to fill this area with a body close here. So normally this area of volume imbalance will act as an area of resistance. So now we are coming from below, so it could act as an area of resistance. So we could have a body close to fill this gap here and then look to the downside. Look to the downside, because we've already had put in this bearish engulfing candle. So that bullish engulfing candle we had on the daily time frame could be for this correction here. Then we look to the downside. That is what I'm looking at currently on gold. That is what I'm looking at. So currently we have this bullish engulfing candle here. So any buy-in that will be engaging, we have to be very careful, because we could be targeting this zone. Then from this zone we push down to the downside. We push down to the downside. As I said, this area of imbalance, volume imbalance, could act as an area, a strong area of resistance, since we are coming from below. In the same way, if we are coming from above, it could act as a strong area of support, then turn price around. So let's watch out for this as price plays out this coming week. As price plays out this coming week. So this is on the daily time frame. So if we go down to the 4-hour time frame, so on the 4-hour time frame, we can see that we put in this high. The first leg of price action, we retraced, and then it gave us the second leg. So the second leg is where most likely more interested taking trades from. And also, if we look at the zone where this is happening, it's happening at the key level 4350. That's where it happened. So this was a beautiful zone to have taken a trade from. Having this confluences here. First leg at the 350 area, second leg at the 350 area, and then bearish engulfing, giving right at the zone, a beautiful area for a sell. So now we can see clearly on here that we have had this area of break. We call it break of structure, change of character, whatever break it is a break. And with this, we want to see price coming back to this area. So if we have a break here, our typical zone should be this area again, should be somewhere here. And then we can see we have also, we are in the zone. We are in the zone. So if price truly wants to continue going down, we could have price coming all the way to this zone, and then in this, with this zone as well, we have imbalance. Okay, I can't draw my imbalance now because I've turned off my wicks, so I need my wicks to indicate where I mark my zone. The same applies to the supply zone as well. So but I did that for us to see clearly the body close of the candle. So here we can see that we are in a downtrend. We put in this lower low, higher low, lower low, and then higher low, higher low. So in this area, that is where we have the volume imbalance, and before that we also have some imbalances along the way. So price might decide to clear these imbalances, fill this volume imbalance, and then continue downwards, or It could be that we will head towards from here. We will head up from here, clearing these imbalances that might be there as a result of this break or change of character here. We could revisit this area before we sell off if we want to continue selling to the downside. So let me turn back the wicks on so that we will have the full information of the price action. So as I said, this is our imbalance supply zone. So you can see imbalances here. Imbalance from here to here is an imbalance where we want price to, or we would anticipate price revisiting there. So as I said, we have this volume imbalance. So a volume imbalance area is an area where you have a price gap down or price gap up, but it's only the wicks that trades into each other. So that is what is known as a volume imbalance. Oops, I lost my chart. Come on, network. The internet is playing up. Internet is playing up. Just waiting for my chart to show up. Come on, come on, come on, come on, come on, come on. All right, it seems my chart is here. It's too big. Resets. Resets. Okay. Sorry, guys. There we go. Let's see. Research. Okay, here we go. Here we go. So as I was I was just trying to enlarge this zone for us to see what I was talking about. So this is the volume imbalance zone where we only have the wicks of the candle trading into each other. So that is an area that was left last week as the market opened. So we could have price coming back to body close here around this area, and then we have the sell off from there. So as I said again, even though we have a bullish engulfing on the daily time frame, the buy-in could be from here targeting this zone, or from this point on we could head up to fill this imbalance. Since we had a change of character here, we could head up from here. So over here we just have to be careful. If we want to take for instance a trade from here to the downside, it must be a confirmation entry. If we want to take a trade from here to the upside, it must be confirmation entry because of this here. So this area also could be used as an inducement area, since we have this zone above here that needs to be filled. But overall, the weekly time frame speaks more volume than the smaller time frame. So as we have the weekly time frame telling us that we have a bearish engulfing candle situation, we could have a retracement filling or correcting some of these price action here, and then we continue the downside selling. So I hope this explains what we should be looking out for this coming week as the market opens. So the same thing as I did before in marking the zones, you can start from the daily, mark your zone on the daily, and then further refine it until you get to your trading time frame. So by doing so, you kind of give yourself a better risk reward ratio in terms of the amount that you want to risk for the gains it becomes smaller as you refine it onto your trading time frame. So I believe this gives us a better picture for what we should be looking out for this coming week. And we have gone past an hour. Any questions, guys? Do you have any question that you want me to look at before I sign off? Okay, I believe we've all had a wonderful time together analyzing these pairs. So no matter what pair you are looking out for, as I started by illustrating, look out for the most recent break of structure. That is what is calling your name. The most recent break of structure is what is calling your name, and it's up to you to respond to it and then take your trades from that zone. Right. Okay. So even looking at gold now, if this on the 4 hours or so, if we want to mark the most recent break of structure, we have these lows here that has been taken out. So this is a break of structure. So all we do is to look for the origin that caused this break of structure. So looking at price action, we could put the origin to this zone where we are expecting price to come to for us to continue the selling. So we could be waiting patiently in this zone. So one thing we could do is we mark our zones and then wait for price. Once price gets to that zone, we can now react from there. Once we get price in that zone, we can react from that, respond by taking our trades from that zone. So supply. So with this last break of structure here, we can see the price action is more or less straight down. We had another break here. So this same break here, the origin will say more or less from this zone, because more or less from this zone. This is much better zone than any other. So let's watch out as we have price coming to us. So with that said, thank you very much, and then I hope you enjoyed this week's trading. Have a wonderful week of trading, and then I'll catch you up later. Till then, it's bye.